is, are we in a bear market or bull market? Because we've broken through key levels, we've seen OGs selling, we've seen ETF outflows, we've seen sentiment on crypto Twitter go through the 5 stages of grief, and then one more stage after that.
Misery.
So, misery, exactly. So what's your read on the markets right now?
So my read on the markets is this is just a correction in an ongoing bull market. And that's counter to the narrative, which is there's this 4-year cycle that was handed from Satoshi and it exists in perpetuity. I don't think that's the case. So I think on a number of factors, on the macro level, it's all driven by liquidity. The work that we've done has said that liquidity explains 90% of the price action of Bitcoin. And global liquidity going into 2026, purposely orchestrated by the Trump administration, is all about printing of money in various guises, plus a big fiscal stimulus. So we've got that happening, we've got the Clarity Act coming through, sentiment is super washed out, I mean unbelievably, miserably, disgustingly washed out, which people now think the cycle must be over, we can't have nice things. But almost nothing went to new highs. Bitcoin did, BNB did, that was about it.
It came very, very close.
It came close and then close but no cigar.
Yeah.
But really, how can it be a bull market when nothing's gone to new highs? And my view on that, it's been driven by an extension of the debt cycle out by another year. So most of the debt refinancing, which drives liquidity, happens in 2026. So also, we've seen stuff like this happen before, these weird sell-offs. If you remember 2021, everyone was really bulled up in the beginning of the year and went down 50% in the middle of the year, then went back up to new all-time highs. It's that kind of similar price action we're seeing there.
Okay, so Q1, we're going to see this flood of liquidity.
Yeah.
For the people watching here, what sort of metrics should they be looking out for to see? Because obviously price action is one thing they hope for, but prior to that, is there any data or metrics? Obviously, you've got a liquidity indicator, but what other publicly available information?
Yeah, I mean, things like global M2 is one measure. A lot of that's driven by the dollar, so a weaker dollar helps as well. Generally speaking, it's listening to what the Fed and the Treasury are saying. And you see these 3-letter acronyms, something like the SLR, Supplementary Leverage Ratio. It means nothing to anybody. What it actually means is the US government is getting the banks to buy the debt. So it doesn't go on the central bank balance sheet, it goes to the banking system itself that creates leverage and creates liquidity. So we're seeing that change. It was announced last week, surprise announcement, and it's out January 1st and mandatory by April. So basically it's forcing all the banks to absorb more treasuries because they've lowered the risk weighting. They're even talking about getting rid of risk weighting on treasuries entirely, which means you can put unlimited amount of bonds on banks' balance sheet. Stuff like that are the big things. We've got the big fiscal stimulus, the big beautiful bill. You know, you've got to think about the US economy as a service sector economy. You're stopping taxes on tips for half of that workforce. That's a big deal. You know, there's a lot of handouts coming from that, so there's a lot of stimulus to come. So just watch out for these marker stones. You'll probably see it expressed via the dollar anyway, as it starts to weaken, and that'll give you your signal, and price usually correlates really highly with it.
Okay, so it's this whole concept of the fiscal dominance, right, where the tail is wagging the dog in terms of like where we go on a monetary sense.
Because we know the SLR change comes in January, they've got to get through month-end funding or year-end funding for the banks, and the plumbing market is broken right now. They'll probably make an announcement about term repo again, a thing nobody understands, but it's basically pushing liquidity in to get through this month-end funding. That's going to help. And then really, all of this kicks in properly by January. And so, if I'm going to be wrong, it's going to be if January and February don't turn out to be very strong months. And it should all set up to be strong.
So January, February, that's the point at which you'll say to yourself, the thesis itself could be called into question if it's not.
Yeah, that's when I will start asking myself more questions. My job is to build a framework with conviction and then be paranoid about it all day. And really, if I focus it down, it's like I really want to see some strong price action, Jan, Feb, starting in December and then moving through.
Okay, so this is the global liquidity.
And that will be the death of the 4-year narrative. The moment that happens, everyone's going to go, oh shit, we got this wrong.
Super cycle?
Yeah. And then it becomes super cycle, it's never going down again, which is always wrong as well.
Yeah, we always wish for that.
Yeah.
So then, that's obviously on the side of global liquidity, how it's going to impact on all assets. And the thesis is then it's going to go down the risk curve to all these other cryptocurrencies as well. We hope Bitcoin will rally above its all-time high again in early Q1. What about the altcoin side of it? Because everyone here has been waiting for an eternity for altcoin season.
So why altcoin season hasn't really happened yet is because it's driven bizarrely by the business cycle, as all risk curves are. So small cap equities are the same as alts, which are just small cap crypto. They're all driven by the business cycle. So when the ISM survey crosses 50 to the upside, which should happen considering we've got fiscal stimulus and monetary stimulus coming next year, and Trump wants to win the midterms, so they're going to throw everything at a strong economy. Scott Bessent says it all day, every day, we're going to have a really strong economy. So that's what they're pumping. So we'll see the ISM survey come up. The moment that happens, people get more income, more earnings, and people push out the risk curve. And it happens in small cap equities, and it happens in alts. So that's the start of alt season. We saw the beginning of it as dominance started to break down. It's still washing around a bit, but the next phase will be the plummeting of Bitcoin dominance as the kind of smart contract world starts taking prevalence.
Okay, so one counter to that thesis, though, is the fact that the market structure has changed with ETFs, and one of the biggest things right now is the elephant in the room is the AI trade. Right now, my question is, would people want to now invest in altcoins down the crypto risk curve when the alternative is allocation to one of the fastest growing sectors in the space? You're incredibly bullish on AI.
Yeah.
Whereas if you invest in altcoins, 96% of the top 100 altcoins from the beginning of the year are down.
Yeah.
Below. AI trade, if you've held NVIDIA, would have been up. So how can you be so sure that people would want to allocate to the most underperforming asset class in aggregate?
So a lot of the time we keep saying retail's not in the market, right? We're seeing no new money in crypto really outside the ETF flows. When retail come in and they have a choice and they say, well, how they think about it is, well, where could Bitcoin end the year, 2026? And if you say 200,000, they say it's up 100%. Where could an altcoin go? It could be 10x. That's the risk curve that people look at all times. Is Google going to double next year? Highly unlikely. Will it go up 50%? Maybe. I mean, it's a gigantically big company already, $3 trillion. So does it get to 4 trillion, 5 trillion? Possible. But if you look at it, the kind of risk-adjusted returns going forwards, if crypto goes up, it will go up more. And it always has done. So AI has got the capital because don't forget, it's had all the investment at infrastructure level as well. It's been the focus of global governments here in the UAE, everywhere. Everybody's looking at AI. But when it comes to where you're going to make your returns, it's pretty simple. If my thesis is right, by Jan, Feb, there's a lot of people who are under-allocated to crypto still, who see it starting to outperform, and they start to panic back in. And we've seen a lot of people in the crypto space move to, buying options on, NVIDIA. Okay, fine, it's made people a lot of money. But again, most people are mercenary for returns, and if returns look like they're going to compound in crypto, they'll come back quickly.
Okay, then go back to this market structure thing with all these products out there.
Yeah.
Your point is that altcoins are a massive beta play on Bitcoin.
That's right.
Higher risk, higher reward. But there are lots of structured products now. You mentioned options. People can just go and trade options. Robinhood for NVIDIA and all these other AI plays.
Yeah.
Financial space now will take away from the need to invest in high risk altcoins.
Again, I think generally people, if you think of the nihilistic nature of the reality of what young people face today, they can't buy a house, they can't get married, they can't have kids, they can't afford anything because the debasement of currency has meant that they can't afford it because their wages haven't gone up. So their propensity to speculate is much higher than anybody else. So when it comes to it, they're still more likely to speculate in crypto in the end. But the hard part is, it's easy to wave your hand and say, altcoin season, because everybody assumes that all of the shitcoins that you own are going to go up in value, but they're not. It's actually a hard game. Where do you go in the actual risk curve? What thesis do you build? What do you buy? Do you look for things with cash flows? Is it something like Aave, or is it one of the emerging layer ones, or is it another application layer? It's not an easy game. Even though people think it's going to bail them out and they're going to make a fortune, the probability out of the 1 million coins out there to get the right ones is pretty low.
Yeah, we'll get into the micro of finding the particular alts that could perform. But just on one more counter to the thesis of altcoin season is the concept of dilution. Yeah. So we've had massive unlocks, we've had many projects come to the market. I can't count how many L1s and L2s we've got now. So the question then is, if you have capital in 2021 coming into altcoin season, you had mass fiscal stimulus, mass monetary stimulus, QE, and now you've got much more altcoins out there as well in terms of, and also dilution in terms of coins out there. Can we expect to see anything like 2021, or is it just going to be isolated narrative rotation for a few?
No, I think we'll see something more persistent, but it will be difficult to choose what the right ones are. But I think we'll see it because the amount of attention on the crypto economy at large is much larger than it was, because the institutions are at play, it's covered in mainstream media now, it's kind of everywhere and pervasive. So I think the amount of capital that can flow in is much larger than it was in 2021, which was much larger than it was in 2017, which was much larger than 2013. So really it's the size of the capital inflows are proportional to the size of the opportunities, and that offsets so much of the issuance going on, and the unlocks, all of that gets dwarfed by the amount of capital that ends up coming into the space. And so, again, I think there's going to be a bifurcation of what's a quality project and what's not, but generally speaking, I don't see any reason why altcoin season won't work. But it depends what your definition of altcoin season. You know, is it going to be your meme coin that you held on from last year that's now worth zero? Probably not.
Smoking chicken fish isn't going to the moon.
I don't think so. I never sold it. It's still there in my wallet of shame.
Wallet of shame, yeah. We all need one of those. We all need one of those. So zooming in then, in terms of like, because you're a macro guy,
yeah.
But you obviously have micro thesis around these particular altcoin narratives and altcoins themselves. So I'm curious, what do you look for when you're looking to invest in altcoins?
So I don't invest in a lot of altcoins. Okay. So I adhere to my own don't fuck this up thesis, which is basically stick to the majors. And then I've gone a bit further out the risk curve in a newer layer one like SWI. And you know, there's a number of these that are out there that are not in the top 10 or not top 5, but high quality projects. So that's where I concentrate my capital. I don't do a lot of the other stuff, but I built a whole asset management firm around this thesis, which we invest in crypto hedge funds. We're a fund of funds, invest in crypto hedge funds. So we invest in 10 of the world's best managers and let them do the work on that. Because it is really hard to choose what it is. And different people have different theses. Some follow momentum-based strategies, others develop kind of big theoretical frameworks of where they think the world is, others use kind of discounted cash flow models. So you have to approach it in a number of different ways to capture it. It's actually hard for individuals to do it, and most of the time I've found that really it comes down to Metcalfe's law, which is network effects. What's getting network effects? You need to prove that the user base is growing, and they need to be active users, not kind of rented users, and the value transacted on that network needs to be growing as well. So you look for those two metrics first, and really price shows a lot of this, which is why so many people use technical analysis in this space.
Yeah. So you focused on the metrics side.
And also, the other thing that I do that's really important, if you're going to buy something, have a benchmark asset in your head. So I would say the benchmark asset, kind of mid-tier, earlier stage, is, let's say, Solana. Your chart better be outperforming Solana, or you are destroying capital by not doing it. So you'd look at Solana ETH, Solana Bitcoin, see where it fits, but then anything you pick needs to outperform those three. If not, put them there. And people just don't do that simple thing, and it really helps.
Okay, and I think last year, talking about switching between...
On the SWI Foundation, but it wasn't actually to do with that. It was because I just saw the chart basing versus Solana, and I saw the network growing. So if I look at the network metrics for SWI, it's one of the fastest of all major projects. In fact, maybe the fastest. So of the 3 fastest currently that we measure, it's NEAR, it's SWI, and it's Avalanche. And so when you see network metrics like that, you focus. If the chart then starts to confirm that, that's when you do it. So I'm looking at weekly charts, even monthly charts, looking for basing patterns, looking for a change in that structure, and that's what led me to say, okay, this is, I think, the bet. Now, I think it's the bet for the cycle, but I can also change that if I see the price structure changing or those metrics changing.
Strong opinions usually help.
Yeah. So I don't trade much, so I'll do 2 asset allocations an entire cycle.
Okay, got it. So metrics is one thing, but what about particular narratives? Because 2026, many people look at narratives as the most important factor when it comes to choosing, between altcoins. Do you have any particular narratives you're excited about?
I've found that we've over-indexed on narratives in the last 2 years because we haven't had massive inflows. So it's really PvP all the time now. And what we've seen is these wild rotations because it's the same capital sloshing around. And we saw it recently with Zcash. Zcash, I think long term is probably a great narrative. I think it's probably right. But what you saw is a market go nowhere and everyone gets bored, one narrative picks up and everyone throws their capital into it, it goes up and then suddenly the market narrative changes and it goes down again. And we've seen that repeatedly. We saw it with meme coins, we've seen it with DeFi, we've seen it with all the things, and nothing's got long-term traction so far because no new capital's coming to the space. So I do think the AI narrative will come back, but in a different form. I think that narrative will be persistent and important. I think we will see, just generally the stablecoin narrative is going to hold for a period of time because it's transacting huge volumes on some of these chains. So Ethereum obviously is the big daddy behind this, but we're seeing lots of chains getting lots of volume and that's really interesting. So I think that's important. And then I also look where nobody else is looking. I always like to be contrarian. So I've spent the entire cycle when my crypto portfolio is up near the highs, I scrape money off and buy high-end digital art. So I spend a lot of my time buying NFTs.
Yeah. So just zone in on one of those narratives as well, because it seems as if this cycle, one of the best product market fits for crypto in terms of a technology has been stablecoins, right? So for retail investors, who can't invest in Tether equity, unfortunately, where would you think in terms of projects particularly, which should they be looking at to, get on top of this narrative itself?
So ETH layer 1 as a settlement layer works because most of them are there, or if they're on the layer 2s, there is a base settlement that comes into the main layer. So that works well. The high performance chains, so Solana, Sui, will definitely see more of that because it just makes sense. So it does accrue to the layer 1, which is why I find you don't have to complicate the game. The layer 1 is the network that all the business is done on. So at this stage, before we get full maturity, just own the layer 1. And I found that generally works easier. I like to simplify everything down so I can be a total moron and be wrong, but still get it right. And the layer 1 trade is always the easiest trade.
And just to finish off, Raoul, you mentioned one of your most important academic theses a bit earlier, and that's don't fuck this up. So 2026, how do people avoid fucking it up when it comes to their portfolio, allocations, and all these?
So the hardest thing that will probably happen in 2026 is altcoin season. And you'll see endless posts on X that I've made a 20x in a month, and you'll be chasing everybody else's returns. Most of those people don't make it. Through my entire career, and I've been in the investing industry for 35 years, almost nobody can make a job as a short-term trader. Almost nobody. And so you've got to realize that. So therefore, don't get caught up in the FOMO narrative. That's the killer. It kills retail investors every time. But if they just held Bitcoin or ETH or Solana, whatever, or a basket of them, and did nothing, they would outperform 99.9% of shorter term traders. So the don't fuck this up really is hold high quality assets, don't FOMO into stuff. If you want to have a degen bag, keep it to 5 or 10% of your holdings so you can have fun in the market and feel like you're active, because you're actually not doing anything with your main holdings. Don't use leverage. October showed us yet again that leverage looks so delightful and so alluring, and leverage on a 80-volt asset is a ticket to bankruptcy.
Yeah. Well, hopefully we don't fuck it up on our way to that banana zone next year.
That's right. So I think 26 is the year of the yellow fruit.
Yellow fruit. We're looking forward to that.
Okay.
Right.
Thanks, Nick.
Yes, guys.
Thanks, everyone.
Thanks, guys. Year of the yellow fruit. I love it. All systems go.